you would always want to be on the side of having good credit.
Do you think Payne will have good credit?
So the products involved in that, it could be like a term loan, working capital, it could be merchant cash advance, it could be a business line of credit. We have about 12 different funding options.
Okay.
So it's not like super expensive funding only, right? So depending on where the client is, we match them there. And we have a community of 7,000 business loan brokers who do that basically, right? So they learn all this process. And the second option, the second bucket for small businesses, they're also non-collateralized. So they don't need to put up their house. For example, Chris, as you know, someone might say, Oz, why wouldn't they just go to a bank and apply for a loan?
Mm-hmm.
Well, as we know, good luck with that. This approval rate is like over 85%. And during the pandemic, it was as high as like 91%. And also, it'll be probably collateralized loan. And also, you'll probably need to provide your tax returns. And the average processing time is 4 to 6 weeks. Even after that, there's no guarantees. You're probably going to get a letter saying that you got declined. So when the small businesses, they don't have 6 weeks to fix the freaking fridge. Like if it breaks, you need it done. Or if they need to make the payroll, it needs to happen this Friday. So just the long story short, those two funding options are the primary options. And within those, we have equipment leasing. Someone is buying a new truck for their fleet. Or like you said, you need to buy a software for your credit repair company that is considered equipment. So we can provide funding based on that too. Does that answer your question?
Absolutely. Yeah, for sure. Two things actually just popped in my head while you were talking, man. As far as the approving side of things, I know you mentioned 680 and above as far as a personal credit score for the startup options. What about DTI? Is it kind of similar to personal financing with your traditional banks? Do consumers need to be under a specific debt to income ratio? I know for like mortgage applications, they want you to be under 40% and things like that. Does that kind of relate to business funding to a sense?
Great question. It does relate. We want them to be ideally at 40 and below, right?
Okay.
But if they're below, doesn't mean that we can't get them funding. It could be that they get a lesser amount, right?
Yep.
For example, this happens all the time. Someone comes to our network saying that I have 780 credit, Chris. I should get probably 150K.
Yeah.
When we look at the debt to income ratio, we're like, not really. There's not a whole lot of wiggle room there. So either we tell them, hey, it's all about setting the right expectation, right? Here's why you're not going to get that. Someone else with 780 with a higher, lower debt to income and all the other credit depth and all that stuff that you specialize in, they will probably get that amount, but we could get you probably 20, 30K. Is that going to be okay? Or if it is like really, really high, then we tell them, hey, it's not going to work. So great point. It's not just the credit score. Like that kind of sometimes fools people, right?
Yeah.
I have the perfect credit. But as you know, when you look at that credit score, sometimes you go, wow, there's a lot there.
Yeah, absolutely. Thanks for tuning in to this episode. If you wish to be a guest on our podcast, visit SturgisCreditRepair.com and click the podcast page to schedule an episode. If you need help with your credit, you can also sign up at SturgisCreditRepair.com and start your free trial today.
Sturgis Credit Repair. Sturgis Credit Repair. If you want a new house, call us.